Hi Monish, good evening. I hope you are clearly listening my voice. Am I correct? Hi, one other student joined. Good evening, other one, Sankiteja. Hi Varun, good evening. So shall we start? It's 7 p.m. Are you ready? Today's assessment procedures, the burning topic which many students find difficult to understand. No worries, we can discuss in a way. So yes, students, today's live revision is about return of income and assessment procedures. Before I start with whatever the running notes that I am writing and teaching to you during the live revision series, that running notes is available in my website. So you can log into phoenixbyuma.com. You can go to free resources. In free resources, there is running notes. Yesterday, we discussed transfer pricing, right? Whatever transfer pricing running notes that I have discussed, it is available here. If you want, you can download also. Likewise, today I am teaching return of income and assessment procedures. Once the class is completed, return of income and assessment procedures running notes I will upload in my website, so you can download it from there. Okay, thank you. Now, let's come into the topic return of income assessment procedures. Two topics are there for today. First, see return of income important. Whatever the important concepts that are there in return of income from examination point of view, all those concepts I will discuss with you. Okay, and same is the case with assessment. First, I will discuss return of income. Sir, what are the concepts that you are going to cover in return of income? I am going to cover who are required to file ITR. That I will cover. Next, I will cover due dates for filing ITR. Next, I will cover loss return, belated return, revised return. Then I will cover cases where PAN is required to be quoted. Very, very important. Many times in MCQs, the question is being asked where PAN is required to be quoted. Next, I will discuss with you about updated ITR. It's also called as ITR-U. So all these topics I will discuss, I will revise from return of income chapter. Next, I will start with assessment procedures. In assessment procedures, I will explain to you first about income tax authorities. Who are income tax authorities? That I will revise. Then we will discuss what are the powers of income tax authorities. Then we will also discuss jurisdiction of income tax authorities. Then I will explain survey and search provisions. Then I will explain to you like 142 1 section. That means like department can ask written information and accounts from S. That I will discuss with you. Afterwards, I will discuss 143.1 intimation. Then I will discuss like there are three types of assessment. I will discuss scrutiny assessment. I will also discuss best judgment assessment. Then I will explain income escaping assessment. I will see if today time is there. I will explain income escaping assessment also, or else I will explain tomorrow. Tomorrow also I reserved my time for assessment procedures because it is lengthy chapter. I cannot rush. I have to revise it in a very cool way. So tomorrow also we have time. If time per income escaping assessment and block assessment. Recent amendment made in Finance Act number 2 of 2024 with effect from 1st September 2020. These two concepts I have to discuss at a stretch. That I will see if time is there today or else tomorrow I will discuss with you. Next 144C is there, dispute resolution panel. Next section 142A is there, special audit. So this much of concepts I will try to cover. If at all any extra time that we have, I will also cover additional concepts. No problem at all. If there is any pending topic in procedures today, like tomorrow also I have time, I will cover balance assessment procedures, then I will cover appeals and review. Okay. So this is just overview. So shall we start quickly with these concepts? First, who are required to file ITR? Every company and partnership firm mandatorily required to file ITR. Company and partnership firm mandatory. Whether they are having income or whether they are having loss, whether there is business, whether there is no business, everything is irrelevant. Every company, every partnership firm, every year mandatorily they are required to file income tax return. Second case, like other persons. Who are other persons? Other persons means like individual, HUF, AOP, BOI, AJP, local authority. So in case of other persons, you will calculate total income. Now, while you are calculating total income, don't take two benefits. What are the benefits that are not to be taken? First benefit that you should not take is like chapter 6A deduction. And second benefit that you should not take is exemptions under capital gains. You know, 54, 54B, 54D, 54EC, 54F. So you will calculate total income. When you are calculating total income, don't claim chapter 6 reductions, don't claim section 54, 54B, 54D, 54C exemption. Okay, don't claim these two benefits. Before claiming these two benefits, if your total income is more than basic exemption limit, then also you are mandatorily required to file ITR. Are you able to understand? See, very simple. While you are calculating total income for the purpose of calculation of tax liability, you will calculate total income normally. But when you are calculating total income to determine whether SSC is required to file ITR or not, for the purpose of determination of filing of ITR or not, when you are calculating total income, don't take two benefits. Don't claim chapter 6 reductions, don't claim exemptions under capital gains. So before you claim, before these two deductions, before these two benefits, if total income is more than basic exemption limit, then SSE is mandatorily required to file ITR. Otherwise, SSE is not mandatorily required to file ITR. Are you able to understand? So, very simple. First, company, partnership firm, mandatorily required. Second, like in case of other persons, they are every time not required to file ITR. When they are required to file ITR, you need to calculate total income. While calculating total income, don't claim two benefits, don't claim deductions, don't claim exemptions. Before claiming these two benefits, if total income is greater than basic exemption limit, then they are mandatorily required to file ITR. Otherwise, third point, in case of ROR, resident and ordinarily resident. You know ROR, right? Resident and ordinarily resident. So, in case of ROR, if he is beneficial owner or beneficiary of any asset located outside India, including financial interest in any entity located outside India, then they are mandatorily required to file ITR. For suppose Kohli total income is less than basic exemption. It is a very good joke, but that is our example. Kohli total income is 2 lakh rupees, which is less than basic exemption. But Kohli is having one house in Australia. Now, even though Kohli income is less than basic exemption limit, as Kohli is resident and ordinarily resident in India, if Kohli is having any property located outside India, Kohli is mandatorily required to file ITR. Are you able to understand? See, there is difference. Beneficial owner is different, beneficiary is different. Beneficial owner means what? The person who is purchasing the asset. That person we call as beneficial owner. The person who is getting benefit out of the asset, he will be called as beneficiary. Your father purchased a laptop to you. Who purchased a laptop? Your father. Your father is beneficial owner. But who is using the laptop? You are using the laptop. You will be considered as beneficiary. Are you able to understand? So that's the difference. So the thing here is not only beneficial owner of any house property, even beneficiary of house property is also required to file ITR. For example, Virat Kohli gave house property as a gift to his mother. Virat Kohli is beneficial owner, his mother is beneficiary. Now, not only Virat Kohli, his mother is also required to file ITR. Are you able to understand? So, in case of resident and ordinarily resident, if he is either beneficial owner or beneficiary of any asset located outside India, or if he is having financial interest in any entity located outside India. Let's say MS Dhoni is there. He has 0.6% equity shareholding in Apple Inc. For example, MS Dhoni total income is less than basic exemption limit, but he is having shareholding in that Apple Inc. Now he is required to file ITR. So irrespective of total income, if any person is like who is resident and ordinarily resident, if ROR is beneficial owner of any asset located outside India, or if he is having financial interest in any entity located outside India, then they are mandatorily required to file ITR. Are you able to understand? Not only beneficial owner, beneficiary is also required to file ITR. Here, I wanted to discuss one note point with you. Virat Kohli gifted house property to his wife Anushka Sharma. Now, Anushka Sharma is there. You know, I think deemed ownership concept you have an idea. You are final students, yet you should have idea about house property as per section 27 deemed ownership concept. If husband gives house property as gift to spouse, even though rental income is received by spouse, it is not taxable in the hands of spouse because husband will be considered as deemed owner. Now, in this case, Virat Kohli gifted house to Anushka Sharma. Now, rental income from that house, it is not taxable in the hands of Anushka Sharma. It is taxable in the hands of Virat Kohli only. That means what? If rental income from foreign house property, if it is already taxable in the hands of beneficial owner, again beneficiary is not required to file ITR. As income from foreign house property is already taxable in the hands of Kohli, again Anushka Sharma is not required to file ITR. Are you able to understand? So that is the concept. Once income from asset located outside India already taxed in the hands of beneficial owner, again it is not taxable in the hands of beneficiary. ROR is having signing authority in any bank located outside India. Then also he is mandatorily required to file ITR. Let's say Surya Kumar Yadav is there. He is having Swiss bank account. Even though his total income is less than basic exemption limit, Sky is required to file ITR because he is having one foreign bank account. So those persons who are ROR in India and are having bank account outside India, irrespective of their total income, they are mandatorily required to file ITR. Are you able to understand? Next. Other than company and firm, remaining persons. For remaining persons in current account, you know current account, right? Generally, current account will be given for business persons. One or more current accounts. One or more current accounts. If deposits in one previous year, total deposits in previous year are more than 1 crore rupees, then also they are mandatorily required to file ITR. For suppose, like I am Umasankar, I am an individual, I started teaching CA final DT and CMA final DT. Now, down the line, I recorded lectures, I sold all those lectures, I opened two current accounts, one in SBI, another one with HDFC. Two current accounts together, whatever the receipts that I have received, if it is more than 1 crore rupees, then I am mandatorily required to file ITR even though I get losses. Are you able to understand? So other than company form, for remaining persons in one previous year, for all current accounts that are there in that particular person's name, all those current accounts together, if total deposits are more than 1 crore rupees, they are mandatorily required to file ITR. Please don't think I really did not have 1 crore rupees of receipts. Right now it is into huge losses. My investment is more than 7-8 lakhs for this venture. I did not get any amount. Hardly I got some 15,000 rupees till now. I hope in future this will escalate. Let's see. Next. In case of other persons, see, for current account limit is 1 crore rupees. I like, let's say I did not have current account, but I have savings account. If I am having savings account, in one or more savings account, if total deposit is more than 50 lakh rupees per annum, then also I am mandatorily required to file ITR. Are you able to understand? See, many people, they are going to foreign trips, but they are not filing ITR. If they are able to go to foreign trips, do you really think their total income is less than basic exemption limit? It will be comedy, right? So those who are paying for foreign trips, okay, they are also mandatorily required to file ITR. So those who are incurring foreign travel expense more than 2 lakh rupees, this foreign travel expenditure can be incurred either for that person or for any other person. Those who are paying foreign travel expense of more than 2 lakh rupees, they are mandatorily required to file ITR. Nirmalamma came, see, people are able to pay more electricity bills. Those who are paying electricity bill of more than 1 lakh per annum, do you really think their total income is less than basic exemption limit? So Nirmalamma told those who are paying electricity expenditure more than 1 lakh rupees per annum, they are also mandatorily required to file ITR. Are you able to understand? In case of senior citizen, TDS deducted or TCS collected, if it is more than 50,000 rupees per annum, they are also mandatorily required to file ITR greater than or equal to 50,000. In case of normal citizen means those who are less than 60 years. For them, if TDS deducted or TCS collected is greater than or equal to 25,000 per annum, they are also mandatorily required to file ITR. Are you able to understand? Next, I am doing business. In my business, because of COVID, huge losses are there. Still, in my business, if I make turnover of more than 60 lakh rupees in business, if turnover is more than 60 lakh rupees per annum, they are also mandatorily required to file ITR. Are you able to understand? I am doing profession. Let's say you wrote for January attempt in March, the results came in March, immediately you started practice. Like luckily on first day of your practice, a client came and paid 20 lakh rupees audit fees. Now, like in profession, if gross receipts are more than 10 lakh rupees per annum, then also you are mandatorily required to file ITR. Are you able to understand? So this is the sum. Shall we discuss about ITR due dates? Everybody, ITR due dates. Yesterday only we discussed transfer pricing. So those SSCs for whom transfer pricing provisions are applicable and who are required to submit transfer pricing audit report, for them due date for filing ITR is 30th November of assessment year. For example, for partnership firm, transfer pricing provisions are applicable. Then not only for partnership firm, like whoever the partners are there, for partners also due date for filing ITR is 30th November of assessment year. Second point, for every company other than transfer pricing, because for company if transfer pricing provisions are applicable, due date is 30th November of assessment year. So every company other than the company for which transfer pricing provisions are applicable, and every other person who are required to get audited under Income Tax Act, audited under section 44AB, for them due date for filing ITR is 31st October of assessment. Here there is one point. For partnership firm, if due date for ITR is 31st October, then not only for partnership firm, for partners also due date for filing ITR is 31st October. Because without concluding partnership firm accounts, how can you conclude individual partner accounts? So for individual partners also due date for filing ITR is 31st October. For other persons, due date for filing ITR is 31st July of. So are you able to understand three due dates? To whom transfer pricing provisions are applicable, due date is 30th November of assessment year. For partnership firm, if transfer pricing provisions are applicable, due date is 30th November. For every company other than the company to whom transfer pricing provisions are applicable, and for remaining persons who are required to get audited under section 44AB, for these category of persons, due date for filing ITR is 31st October. For a partnership firm, if tax audit is applicable, then due date for partners also for filing ITR is 31st October. For remaining category of persons, due date is 31st July. Sir, what if ITR is not filed within the due date? ITR not filed within due date. Then many consequences are there. First is late fees will be levied under section 234F. If total income is less than or equal to 5 lakhs, late fees is 1000 rupees. If total income is more than 5 lakhs, late fees is 5000 rupees. Able to understand? So this is the. I hope you are clear with who are required to file ITR and what are the due dates. Now shall I proceed further? Next we are going to discuss loss return. 139.3 loss return. Give me 1 second. See, if you want to carry forward losses to subsequent years, you are mandatorily required to file ITR. House property loss, unabsorbed expenses. These two, even though ITR is not filed within due date, still these two losses can be carried forward to subsequent years. But whatever business loss, capital loss, and loss from owning and maintaining resources, these three losses, if you want to carry forward to subsequent years, then mandatorily you should file ITR, and that ITR also to be filed within due date. See, two conditions. You should file ITR. You cannot file ITR after due date. Only if you file ITR within the due date, then only you can carry forward these losses. Otherwise, you cannot carry forward these losses to subsequent years. Are you able to understand? So, whatever the losses, business losses, that can be speculative, specified, non-specified, non-speculative, any type of business loss, capital loss, that can be long-term capital loss or short-term capital loss, loss from owning and maintaining resources. If you want to carry forward these losses, mandatorily you are required to file ITR, that too within the due date. Next, restriction is on carry forward but not on set off. What do you mean by this? Let's say you have a house property income 8 lakhs and there is business loss 14 lakhs. You filed ITR after due date. Now, can you do set off? Yes, set off is permitted. After setting off, how much is business loss? Business loss is 6 lakh rupees. Now, can you carry forward this business loss? You cannot carry forward. That means what? Restriction is not there on current year set off. Even though you file ITR after due date, still in current previous year, you can do set off. But if you want to carry forward to subsequent years, then mandatorily you are required to file ITR with the due date. Are you able to understand? Previous year 23-24. Okay, like let's say there is business loss. Business loss 10 lakhs. ITR filed within due date. Filed within. In previous year 24-25, there is business income 25 lakhs, but ITR filed after due date. So in 24-25, ITR is filed after due date. Now can you carry forward and set off 10 lakh rupees? Yes, you can carry forward and set off 10 lakh rupees because the year in which loss is incurred, in that year you need to file ITR within the due date. The year in which you are setting off the loss, in which year you are setting off the loss, in 24-25 you are setting off the loss. So in the year in which you are setting off the loss, even though you do not file ITR within the due date, still you can carry forward and set off. So the criteria is the year in which you incur the loss. In that year, you have to file ITR within the due date. In the year of set off, even though you do not file, still you can carry forward and set off. Are you able to understand? Sir, what are the, like, due to unfortunate scenarios, due to health issues or medical issues, or there is a fire in the factory, all books of accounts were burnt, we could not file ITR within the due date, but there are losses. Now, after due date also, can you carry forward these losses? Yes, after due date also, you can carry forward these losses. Are you able to understand? Sir, after due date, how can we carry forward those losses? You have to make application to income tax authority. After you make application to income tax authority, then income tax authority will condone your delay in filing ITR. For example, 31st July is my due date. But before 31st July, I could not file ITR. My factory got fire. Entire books of accounts were burnt out. But I filed ITR on let's say 15th September 2025. Now I filed after due date, but there is loss of 125 lakhs. 125 lakhs is very huge, right? I want to carry forward to subsequent years. How can I carry forward to subsequent years? I need to make application to income tax authority. If there is genuine reason, income tax authority can condone the delay and income tax authority will allow you to carry forward the loss to subsequent years. Sir, to which income tax authority we need to make application? Here there is amendment. Listen very carefully. Before 1st October 24, on or after 1st October 24. Before 1st October 24, if your loss is up to 50 lakhs, then you need to make application to CIT or PCIT. If your loss is more than 50 lakhs and up to 2 crore, you need to make application to Chief Commissioner of Income Tax. If your loss is more than 2 crores and up to 3 crores, you need to make application for Principal Chief Commissioner of Income Tax. If your loss is more than 3 crore rupees, then you need to make application to CBDT. However, from 1st October 2024, there is amendment. If your loss is up to 1 crore rupees, you can make application to CIT or PCIT. If your loss is more than 1 crore and up to 3 crore, you need to make application for Chief Commissioner of Income Tax. If your loss is more than 3 crore, then you need to make application for Principal Chief Commissioner of Income Tax. Now from 1st October 24 onwards, there is no concept of application to CBDT. Okay, again CBDT means confusion. In CBDT, many people are there to whom you need to make application. Okay. So I hope you understood loss return. Now shall I explain belated return and revised return? Till here, are you clear? Leave the comment. Not a hurry. Tomorrow also we will discuss assessment procedures. If you want any extra concepts specifically to be taught, comment today at the by the end of the session. I will discuss those concepts also with you in tomorrow's. Shall I proceed further? Are you there, people? Now, section 139(4), belated return. See, you forgot to, you are so busy in your CA final preparation. There is your best friend, you forgot to wish your best friend on his birthday. Now what will you do? You will call him after the birthday is over. You will tell, "Arey mama, I forgot to wish you because I was busy in my CA final," and you will wish him lately. You will tell belated happy birthday. Okay, same is the case. If you do not file ITR within the due date, if you are filing ITR lately after the due date, then that return we call as belated return. Are you able to understand? Sir, we can file ITR lately, but can we file ITR of 2004-5 now? Not possible. Even to file ITR lately, there are time limits. Within those time limits only, you can file ITR lately. Sir, then what is due date for filing belated return? Due date for filing belated return is 3 months before completion of assessment year or date of completion of assessment, whichever is earlier. What do you mean by this? 3 months before completion of assessment means 31st December of assessment year or date of completion of assessment, whichever is earlier. Within that time only you can file belated ITR. After, after this due date, you cannot file belated return. In that case, you can file ITR-U, which we will discuss little later. Okay, so to file ITR lately, there are time limits. Due date is 31st December of assessment year or date of completion of assessment, whichever is earlier. Sir, what if I file belated return? Just now we have discussed. If you file ITR lately, you cannot carry forward business losses, you cannot carry forward capital losses, you cannot carry forward losses from owning and maintaining resource. At the same time, you cannot claim deduction under section 10AA. You cannot claim income based deductions. There are some income based deductions, 80IA to 80RRB. Those deductions also you cannot claim if you file ITR after the due date. Next, uh, late fees we have discussed. If you file ITR after due date, if total income is more than 5 lakh, late fees 5,000. Total income less than 5 lakh, late fees is 1,000 rupees. Now, if you file ITR after the due date, you are required to pay interest under section 234A. That also I will discuss with you. Advanced tax and interest one concept is there. In that I am going to discuss with you how to calculate interest under 234A. Next, see, if sometimes department will pay refund to you. If there is refund, then on that refund, interest will also be paid by department. So while calculating the interest, generally interest will be calculated from 1st April of assessment year. But if you file ITR after the due date, your interest on refund will not be calculated from 1st April of assessment year. It will be calculated from actual ITR due date. Okay, so these are all the consequences if you file ITR. Are you able to understand? Next, shall I explain revised return 139.5? Ah, the doctor is there. He need to do surgery for right kidney, but he forgot, like, he had an argument with his wife. After argument with wife, he came to operation theater. Instead of doing operation for right kidney, he did operation for left kidney. Okay, now it is a huge thing. Okay, he is playing with the lives of the patients. Chartered accountant is there. He did some mistake in filing ITR. What will happen? We will file revised return. Okay. So if you make any mistake while filing ITR, okay, all those mistakes you can rectify by filing the revised return. So, sir, how many times a revised return can be filed? Revised return can be filed n number of times. You can file 20 times, 30 times, 40 times. You can revise it as many times as you can. Whatever the latest revised written is there, that will be considered as final return. Sir, can loss return be revised? Yes, loss return can be revised. Sir, whether original return filed under 139(1), can it be revised? Yes, it also can be revised. Sir, belated return was filed, can belated return be revised? Yes, belated return can also be able to understand. How many times? You can revise it n number of times. Sir, is there any time limit? Yes, there is time limit. Whatever the due dates that are there for belated return, same due dates are applicable for revised return also. Are you able to understand? So same due dates. Same due dates are applicable for revised return also. Like that means revised return can also be filed before 31st December of assessment year or before date of completion of assessment, whichever is here. Are you able to understand? That's the concept relating to revised return. Next, there is one concept intimation which I will discuss with you in this class only. Intimation under section 143.1. Even if you receive intimation under section 143.1, still you can file revised return because intimation is not completion of assessment. It is calculation made by department. So after receiving intimation under 143.1 also, still you can file revised return. Able to understand? Now, we discussed the trust taxation. Do you remember trust can claim exemption under section 11, 12? So total income of trust before section 11 and 12 exemption. 11 and 12 exemption. If the total income is more than basic exemption limit, then trust is mandatorily required to file ITR. If trust do not file ITR, like penalty will be levied 500 rupees per day. Are you able to understand? Similarly, political party is there. Generally, political party will claim exemption under section 13A. So, total income of political party before exemption under section 13A. If the total income is more than basic exemption limit, then political party is also mandatorily required to file ITR. Able to understand? Next, there are certain institutions for whom exemption is given under section 10. Before claiming that exemption, if their total income is more than basic exemption, then also they are mandatorily required. Next, we will discuss cases where PAN is required to be quoted. This is very, very important. So, this is you can see quoting of PAN is mandatory. Quoting of PAN is mandatory. When is mandatory? If you are purchasing any motor vehicle other than two-wheeler vehicle, that means what? Auto, three-wheeler, four-wheeler, other than two-wheeler, other than bike, remaining any motor vehicle if you purchase, then you are mandatorily required to give PAN number. Only if you give PAN number, that vehicle will be sold, otherwise vehicle will not be sold. Next, if you are opening any account with bank other than basic savings account and time deposit account, you wanted to open FD, only if you give PAN number, then only FD account will be opened. You wanted to open current account, only if you give PAN number, then only current account will be opened. Next, if you want to make application for debit card or credit card, so if you want any debit card or credit card, mandatorily you are required to give PAN number, otherwise debit card and credit card will not be issued to you. Similarly, if you want to open demat account, you know demat account, right? You can purchase listed shares and securities through demat account. For opening demat account also, PAN is mandatory. Next, you went to hotel or restaurant. In articles, you are all going to hotels, right? So for like per bill, if you are making cash payment of more than 50,000 rupees, very, very, very important, because students will forget in the examination. They will think any payment more than 50,000 rupees PAN is required to be quoted. That is not correct. Only if cash payment per bill is more than 50,000 rupees, then only they are mandatorily required to give their PAN number. So what will we do? We will split the bill. We will ensure each day bill is less than 50,000 rupees, and we will give it in cash. We do not give PAN. Okay. See, you will purchase foreign currency, right? You will go to foreign exchange dealer. Let's say you went with 40 lakh rupees cash. You gave 40 lakh rupees cash. You wanted dollars. So when you are making cash payment of more than 50,000 rupees for purchase of foreign exchange, foreign currency, then also you are mandatorily required to give PAN number. Similarly, when you are purchasing units of mutual fund and amount paid for units of mutual fund, that can be either cash or in the form of bank. If the amount paid is more than 50,000 rupees, then also you are mandatorily required to give PAN number. Next, when you are purchasing debentures or bonds from a company, if the amount of debentures and bonds is greater than 50,000 rupees, the payment made for purchase of debentures or bonds is more than 50,000, then also you are mandatorily required to give PAN number. Next, if you are purchasing any bonds issued by RBI, then limit is 50,000 rupees. You know, right? If you go to any bank, you wanted to do cash deposit. If you want to do cash deposit of more than 50,000 rupees, they will definitely ask your PAN number. Only if you give PAN number, then only they will accept cash deposit. That's why in public, like in ATMs, there is cash deposit machine also. But in that cash deposit machine, you cannot deposit more than 50,000 rupees because of this reason. Because if bank is accepting more than 50,000 in cash, it should take PAN number. That's why in cash deposit machines also, you cannot deposit more than 50,000 rupees. Similarly, withdrawal, if you want to withdraw more than 50,000 cash from bank, then also you are mandatorily required to give PAN number. What is the loophole? Every day I will withdraw only 49,000 rupees. In that way, I can escape. Okay. If you want to deposit, open time deposit with banking company, cooperative bank, post office, Nidhi company or NBFC. Nidhi company is also kind of NBFC only. So if amount of deposit is more than 50,000 per transaction, or for all transactions if amount of deposit is greater than 5 lakhs per annum. So any one of the condition, per transaction more than 50,000 or all transactions together you deposited more than 5 lakhs, then also you are required to give PAN number. Whenever you purchase prepaid instruments, then also like for purchasing prepaid instruments, if you deposit more than 50,000, then also you are mandatorily required to give PAN number. Life insurance premium, this is a generic point. I also pay life insurance premium. If I like, they asked me my PAN number. So whenever you pay life insurance premium of more than 50,000 rupees, then they will definitely ask for PAN number. PAN is required to be quoted. Similarly, like unlisted shares, whenever you are buying and selling unlisted shares, and if the amount is more than 1 lakh per transaction, like you have practical experience of filing ITR, right? So whenever there is buying and selling of shares, you need to file ITR-2. Similarly, for company also, we need to file ITR-6. Okay. So when we are filing ITR for company as well as whenever there are capital gains, we need to give our PAN number if the amount of transaction is more than 1 lakh rupees. Okay. So while you are filing return of company, you need to give information about shareholders. Like whoever the shareholders that got exited from company, whoever the shareholders newly joined, their PAN number is also required to be given. Then only ITR will be processed. In like this is residuary 18. So in any other case, either for buy like for sale of goods or services, let's say you went to gold shop and you purchased gold more than 2 lakh rupees. He will ask your PAN number. Then you have to tell, divide it into two bills. Each bill is less than 1 lakh rupees. Are you able to understand? So in any other case, if you are accepting for any transaction, if the transaction accepted is more than 2 lakh rupees, then also you are mandatorily required to give your PAN number. So another guy came. Hi. Sir, what if PAN number is not given? If PAN number is not given, then penalty of 10,000 rupees will be levied. Next, I will discuss with you ITR-U. Technically, government made PAN mandatory to everyone these days. Yes, of course. Otherwise, how can income tax department trace? So income, wherever PAN is given, information will be passed on to income tax department, so it can catch you. Okay. Next, see, remaining small concepts are there. You can read. If you have any doubt, ask me, because as we are having less time in revision, to the extent possible, I am doing revision for important concept. Now, ITR-U 139.8A. See, maximum you can file belated return up to 31st December of assessment year. Am I correct? Let's say previous year 24-25 is there. What is the maximum time that is available to file ITR of 24-25, 31st December of assessment year? Sir, after 31st December of assessment year, can you file belated return? You cannot file belated return. Can you file revised return? You cannot file revised return, but you can file ITR updated return. So for how much period? Let's say end of assessment year is 31st March of assessment year. From end of assessment year for next 24 months, you can file ITR. If you file ITR-U after 31st December of assessment year and before 12 months from end of assessment year, then penalty of 25% will be levied. If you file ITR-U after 12 months from end of assessment year but before 24 months from end of assessment year, then the penalty is 50%. In 25-26, like to file ITR-U, 4 years time limit was given. Okay. Sorry, in a flow I told, please don't remember this. For you this is not applicable. For you only 2 years from end of assessment. Okay. Sir, who can file ITR-U? See, originally you filed loss return. Now, can you file ITR-U? Yes. you can file ITR-U, but whatever the ITR-U is there, in that ITR-U, you should show income. Okay, then only you can file ITR-U, otherwise you cannot file ITR-U. So originally, like income is 10 lakh rupees. As per ITR-U, income is 8 lakh rupees. Can you file ITR-U? Not possible. That means what? And ITR-U is entirely in favor of department. Because of ITR-U, if your income decreases, or if your loss increases, or if your refund increases, then you cannot file ITR. Are you able to understand? So your income is 10 lakh rupees. As per ITR-U, your income is 15 lakh rupees. Can you file ITR-U? Yes, you can file ITR-U. Like as per original return, loss is 8 lakh rupees. As per ITR-U, there is income of 2 lakh rupees. Can you file ITR-U? Yes. Because from loss, you are coming into income. There is decrease of loss. Loss is 8 lakh rupees. Here, loss is 10 lakh rupees. Can you file ITR-U? Not possible. Cannot file ITR-U. Similarly, as per original return, refund is 6 lakh rupees. Now, refund is 8 lakh rupees. Can you file ITR-U? Not possible. Refund is 6 lakhs. As per ITR-U, refund is 4 lakhs. Can you file ITR-U? Yes, file ITR-U. So, very simple. Because of ITR-U, if your income increases and tax liability increases, if your loss decreases, if your refund decreases, in all these cases, you can file ITR. Are you able to understand? So, this is the simple concept. Next, because of ITR-U, if any earlier year income changes, then also you cannot, then also you need to file ITR-U of earlier years. Wait, one comment. Original return loss was 20 lakhs, but ITR-U loss was reduced to 2 lakhs. Is it possible to file? No, it is not possible to file. See, originally you filed loss return. Now you wanted to file ITR-U. Now definitely you should show income. Then only you can file ITR-U. I told here na. Definitely you should show income. That means doubt asked is loss here is 8 lakhs. Now you wanted to show loss of 2 lakhs. Can you file ITR-U? You cannot file ITR-U. That's how the provision is. Whenever there is loss return, mandatorily you should show income. Then only you can file. Okay. Yeah, refund is also not possible through ITR-U. Uh, I will tell one example. In previous year 22-23, your business income is, let's say there is business loss 8 lakh rupees. In 23-24, your business income is 20 lakhs. You have done set off and your income is 12 lakh rupees. In previous year 24-25, you wanted to file ITR-U of previous year 22-23, and as per ITR-U, you disclosed your income is 3 lakh rupees. That means what? This business loss 8 lakh rupees you are avoiding, and you filed ITR-U. As per ITR-U, you disclosed total income of 3 lakh rupees. Now, for 22-23, you filed ITR-U, you disclosed income of 3 lakh rupees. For 23-24, then this set off is also not allowed. Na? Your income is 20 lakhs. Na? So for this, either you need to file belated return or you need to file ITR-U. Are you able to understand? Because of filing ITR-U of 1 year, if it is having impact on further years, for further years also you need to change the return. Either you need to file ITR-U or you need to file belated. Are you able to understand? Sir, can we update ITR-U? Let's say I filed ITR-U, I disclosed income 8 lakhs. I made mistake in this. Can I revise ITR-U by filing another ITR-U? That is not possible. ITR-U cannot be updated, ITR-U cannot be revised. Similarly, like if search is conducted in your place as per section 132, or if your books of accounts are requisitioned from another department of government under section 132A, in that case also you cannot file ITR. Okay. So this is the concept broadly relating to ITR-U. So till here we discussed about return of income. Now shall I shift to assessment procedures? Interesting part. This is over. Now we will shift to assessment procedure. So are you clear with return of income? Shall I proceed with assessment procedures? Everybody. Interesting. Whatever the doubts that you are having, please ask, because this is such a chapter. Now let's start. First of all, we will discuss income tax authorities. Unless we revise income tax authorities, you do not completely understand the assessment. So first we are going to revise income tax authorities. Now see, there is Ministry of Finance, right? Under Ministry of Finance there are two departments: Department of Revenue, Department of Expenditure. Under Department of Revenue there are two further departments: CBDT, CBIC. You know, for direct taxes, Central Board of Direct Taxes; for indirect taxes, Central Board of Indirect Taxes and Customs. Under CBDT, there are another two wings. Those are Assessment Wing and Investigation Wing. Who are there under Assessment Wing? Under Assessment Wing, like a सबसे बड़ा authority is Principal Chief Commissioner of Income Tax. Who is the top-notch authority? Of course, top-notch authority is CBDT, but under Assessment Wing, the top authority is Principal Chief Commissioner of Income Tax and Chief Commissioner of Income Tax. See, Principal Chief Commissioner, both are of equal rank. Both hold same powers except in one or two cases. We discussed in loss return. Okay, if loss is up to 3 crores, you need to make application to Chief Commissioner. More than 3 crores, you need to make application to Principal Chief Commissioner. Likewise, minor power difference is there, but more or less, Principal Chief Commissioner, both are of equal rank. Are you able to understand? Next, under them, there will be Principal Commissioner of Income Tax or Commissioner of Income Tax. Okay, under them there will be Additional Commissioner of Income Tax. There will be Joint Commissioner of Income Tax, JCIT. Under them there will be Assistant Commissioner of Income Tax or Deputy Commissioner of Income Tax. Under them there will be Income Tax Officer, we call as ITO. Under them there will be tax recovery officer, we call them as TRO. Under them, there will be inspector of income. Now, see, additional commissioner, joint commissioner, assistant commissioner, deputy commissioner, ITO, all these four, my God, I have drawn rectangle. All these four we call as assessing officer. Assessing officer. Assessing officer. Okay, these three category of people we call as. Similarly, there is investigation wing na. Under investigation wing, सबसे बड़ा authority is Principal Director General of Income Tax and Equal Authority Director General of Income Tax. Under them, there will be Principal Director of Income Tax, Director of Income Tax. Under them, there will be yes, Additional Director of Income Tax, Joint Director of Income Tax. Under them, there will be Assistant Director of Income Tax. Next, Deputy Director of Income. Even these are also considered as assessing officer. Okay, additional director, joint director, assistant director, deputy director will also be considered. See, I am giving one nickname. These two I call as bosses. These two I call as top bosses. Because down the line we are going to study, survey, search, various provisions. We need to take like department is required to take prior approval. So whenever prior approval of commissioner or principal commissioner or director or principal director is required, I will tell boss's permission is required. Whenever the permission of principal chief commissioner, principal director general, their permission is required, I will tell the permission of top bosses is required. Okay. See, assessing officer, what assessing officer will do? Assessing officer will do assessment. There are basically three types of assessment. There is 143.3 scrutiny assessment. It is also called as regular assessment. 144 best judgment assessment. 147 income escaping. What they do after doing this assessment, they will pass assessment order. Na? This assessment order can be challenged in CIT appeals. So whatever the assessment order is there, that can be challenged either at CIT appeals or JCIT appeals. CIT appeals, JCIT appeals, they are not outside, they are within income tax department. So CIT appeals, JCIT appeals also we can call as income tax authorities. They are also called as income tax authority. They are also part of department. They are not outsiders. Inside the department only, there is separate one judicial authority that we call as CIT appeals or JCIT appeals. My dear students, please remember CIT appeals, JCIT appeals, they are not assessing officers. Okay, they are income tax authority, but they are not assessing officer. There are some faculties who are telling you wrong in the market. CIT appeals, JCIT appeals, they are not assessing officers. They are income tax authority, but they are not assessing. Okay. Now, all these together, TBDT, assessment wing, investigation wing, all these together, including CIT appeals, JCIT appeals. We call these people as income tax. Okay. Sometimes in MCQ they may ask. Next. See, I file appeal in CIT appeals, JCIT appeals. I will lose. What is next remedy? I will go to ITAT. Okay. In ITAT also I lost. Where will I go? I will go to High Court. In High Court also I lost. Where will I go? I will go to Supreme Court. In Supreme Court also I lost. I will go to international court. Okay, is it possible? I cannot go to international court. If I lose in Supreme Court, I have to come back home and sleep. Okay, I cannot go to international court. So these three people are there na. ITAT, High Court, Supreme Court. These are not income tax authority. Are you able to understand? So I hope you understood the concept of income tax authorities. Did you understand? Next, whoever the income tax authorities is there, for them the jurisdiction will be determined. Jurisdiction. The jurisdiction will be determined either on territory basis. Territory means what? Pin code. Okay. For example, for Amirpet, one assessing officer is there. For Vanasthalipuram, another assessing officer is there. That means they are dividing the powers based on, like they are defining the jurisdiction based on pin code, based on territory. That is one type. Or it can be determined based on person or classes of persons. For example, for all companies, one assessing officer is there. For all trusts, one assessing officer is there. That means assessing officer jurisdiction can be defined by CBDT based on persons also. Based on class of income. What do you mean by class of income? For all those who are getting salary income, for them one assessing officer will be there. For all those who are getting profession income, for them one assessing officer is there. For all those who are getting house property income, their cases will be dealt by one assessing officer. That means jurisdiction can also be determined based on class of income. Last one, cases or classes of cases. That means what? In Hyderabad, like real estate is very much. So department wants to target those who are into real estate. For only dealing with real estate, separate assessing officer can be appointed by CBDT. In that way also jurisdiction can be okay. See, let's say I am income tax authority, I am commissioner of Amirpet jurisdiction. Those who are residing in Amirpet, for them I can give notices. For them, I can issue summons. I can ask them to come to my office and meet me in person. Those who are having business in Amirpet, okay, against those business, those who are running profession in Amirpet, against those people also, I can issue notices. I can take action. In Amirpet, there is one company, My3 Okay, that company is having branches in 3-4 cities. If any company is having principal place of business in my Amirpet jurisdiction, okay, then with regard to that company, whatever the branch offices are there, I can also take action with regard to those branch offices, even though they are not in my jurisdiction, because principal office is there in my jurisdiction. Are you able to understand? So assessing officer can take action against those who are residing in his jurisdiction, those who are doing business or profession in their jurisdiction, those who are having principal place of business in their jurisdiction. Against these people, assessing officer can take action. Next, what are powers of income tax authority? Like income tax authority can do discovery and inspection. That means what? Whatever my jurisdiction is there, in that jurisdiction, I can go to any place, I can do inspection, I can do verification, like subject to approval given by bosses or top bosses. After taking their approval within my jurisdiction, I can do verification, everything. Okay, I can do discovery, I can also inspect various people that are there in my jurisdiction. Second, I can enforce attendance of any person, and I will take him on, I will take oath from him. Okay, that means what? Let's say, like during income tax proceedings, I am suspicious about one person, he is in my jurisdiction. I will call him to my income tax office, I will take oath from him. Okay, whatever he is saying, it is genuine or not, I will take oath. Next, third, I can issue summons. Sir, what is a summon? Summon means what? If I issue summon, definitely that person is required to come to my office and he should meet me in person. See, I can give notice, I can also give summon. What is the difference between notice and summon? If I give notice, either SSC will come or SSC's legal representative will also come. But if I give summon, SSC himself, he need to come to my office. So whenever like department has like assessing officer has power to issue summons, to whom the summons are given, they are mandatorily required to come to the assessing officer and meet him in person. Next, what's the next power? Yeah, next power is impounding books of accounts. That means what? I can go to any premises in my jurisdiction, I can impound books of accounts, but prior approval of joint commissioner is required. Maximum I can impound books of accounts is for 15. So these are all the powers of income tax authority. Next, let's say I am doing as like I am assessing officer of Amirpet jurisdiction. I got shifted from Amirpet jurisdiction to Malkazgiri jurisdiction. Now, what is the scenario? Whenever I go to Malkazgiri jurisdiction, there is another income tax officer with the name Varun. Varun replaced my position. Now, Varun will start again doing assessment from the beginning. Varun will not start doing assessment from the beginning. Wherever I left the assessment, from that point only, Varun will start doing the assessment. But before he start the assessment, he will give opportunity of being heard to the bosses are there na, CIT, PCIT, CCIT, PCCIT. Okay, bosses have power to like change assessing officer from one jurisdiction to another jurisdiction. I am doing I am income tax officer in Amirpet. Boss came to know I am taking bribes in Amirpet. Boss can immediately shift me from Amirpet jurisdiction to Malkazgiri jurisdiction. Okay, so bosses have power to shift assessing officers from one jurisdiction to another jurisdiction. Okay, so this is the concept relating to income tax authority. Now we will discuss survey. Shall we discuss survey? Everybody, survey and search I will discuss now. Very, very, very important. You cannot ignore survey and search at all. Shall I discuss survey? Everybody, I can understand this chapter is boring, but you have no option. You have to listen, you have to internalize, you have to revise, you have to get marks in the exam. That's the only option. Okay. Naresh is saying hi. Hi, Naresh. మీరు జోక్స్ వేస్తూ చెప్పండి. See, this is not regular class. If it is regular class, we would have had full entertainment. This is revision class. I need to cover plenty of sections. You know assessment procedures, how many sections are. At the same time, I cannot rush. If I bring comedy into this revision series, the class will like anything. Oh, Divya. Okay, let's start. Power of survey. See, if department wants to do search under section 132, then they need to have prior information. Only based on prior information they can do. But to do survey, prior information is not required. If income tax department feels suspicious about any person, that's it. They can go and they can do the. So like income tax department, income tax authority can go to any place of business or profession, or it can go to any place where charitable activity is going on, and they can do survey. They can go to any place within their jurisdiction. Assessing officer within his jurisdiction, he can go to any place of business or any place of profession or any place where charitable activity is going on, and he can do survey over there. But prior approval of top bosses. Top bosses means chief commissioner, principal chief commissioner, director general, principal director general. Prior approval of top bosses is required. That means only with prior approval of top bosses, like survey can be done. Once upon a time, this prior approval of top bosses, this provision is not there. What happened? Every small income tax officer, he is taking advantage of section 133. Okay, he is misutilizing the section. He went to one shop, like for refrigerator, he purchased a refrigerator 40,000 rupees. He asked shop owner to reduce the price to 22,000 rupees. Okay, shop owner said no. Immediately he started doing survey. So it has become like every income tax officer is taking advantage of 133 survey. So that's why lawmakers made the amendment. They said only with prior approval of top bosses survey can be done. So like income tax authority, nothing but assessing officer, additional commissioner, joint commissioner, assistant deputy commissioner, income tax officer. Within their jurisdiction, they can go to any place of business or profession, and they can go to any place where charitable activity is going on, not religious activity. That means what? Let's say I am income tax officer of Amirpet. In Amirpet, there is one temple, Gandi Maisamma temple. I wanted to do a survey of Gandi Maisamma temple. Can I do? I cannot do. I can visit only place of business or profession, or I can visit any place where charitable activity is going on. I do not have power to visit place where religious activity is going on. Are you able to understand? Prior approval of top bosses is required. Sir, what they will do in survey, once they come to survey, like they will count the physical cash. After counting physical cash, they will compare physical cash with cash that is there in books of accounts. Next, second point, they will count the stock in trade. They will count the inventory. After counting the stock, they will compare the stock with books of accounts. Next, like if they want any documents, they can go through all the documents. They can take printouts. They can take extracts of all the documents. Whatever the documents they wanted, they can take printouts. Next, like suddenly income tax department came to survey for my office. I maintained one cash book. Now after they go back, I will tear off that cash book. I will bring new cash book. Chances are there na. So what department will do when they are doing survey? They will keep identification marks. Whenever department comes again, I should show the same cash book with same identification mark. Okay, so department also have power to keep identification marks during for my books of accounts. Okay, so they will verify cash, they will verify stock, compare with books of accounts, they will take printouts, they will take extracts, they will keep identification marks. They also have power to impound books of accounts. Impound books of accounts means what? My books of accounts will be taken by income tax department, but maximum they can impound books of accounts for 15 working days, not 15 days. Whatever the working days are there, for 15 working days, income tax department can impound my books of account. And what income tax department will do? It will prepare statement of inventory. Here inventory means not stock. Whatever the gold, jewelry, arts, and whatever the costly items that are there in my business, all of them they will prepare list. What are all the jewelry that I am having, what are the gold, whatever the precious metals that I am having, whatever the assets that I am having, whatever the stock that is there, whatever the cash that is there, they will prepare statement of inventory. See, under survey, they do not have any power to impound assets. They have only power to impound books of accounts. Impound means what? Seizing. Okay, taking away the books of accounts. but they do not have any power to take away the assets. Are you able to understand? Even books of accounts also they can impound maximum for 15 working days. After 15 working days, they should give back. Sir, is there any possibility that they can impound after 15 days also? Yes, they can impound after 15 days also, but prior approval of bosses or top bosses is required. That means income tax officer wants to retain books of accounts as per section 133, or even after 15 days, he need to take prior approval of bosses or top bosses, then only allowed, otherwise it is not allowed. Sir, survey will be done as per section 133. Now I am teaching class to you, time is 8:20. Now can they come and do survey in my place? Is there any time limit? Yes, there is time limit to do the survey. What is the time limit to do the survey? If they want to do survey at a place of business or profession, then they can enter only during business hours. They can enter only during business hours. Let's say I am into coaching business. I kept my timings as morning 7 to night 9. Now time is 8:20 only. Time is not 9. They can come and do survey of my place of business. Are you able to understand? Five-star hotel is there. It runs all 24 by 7. They can do survey of five-star hotel at any time. Pub is there. It is not available in the morning. Pub is available after like evening 8 to morning 3 o'clock. Now, if they want to do survey of pub, they can do in between 8 to 3. Are you able to understand? So, whenever the place is open for business or profession, only during business hours, they can enter and do the survey. Very, very important. Restriction is only for entrance. Restriction is not for exit. They can come now. Okay, at 8:20, they can start doing the survey and they can leave at 12 p.m. also. If they leave at 12 p.m., no problem at all. Restriction is there only for entry. Restriction is not there for exit. Are you able to understand? At the same time, like whenever they are doing survey, they cannot do overnight. Okay. At some point of time in the night, they should stop survey. They should go back and tomorrow they should start. They do not have any power to do survey overnight. Power to do proceedings overnight is available only under. Okay. Now, there is one client with the name DLF Limited. Mr. Uma is auditor of DLF Limited. Okay. In fact, I am not the auditor. Now, don't spread buzz rumor about me. Okay, I am not the auditor. But in my example, I can take the way I want it, right? So let's say Mr. Uma is auditor of DLF Limited. Entire books of accounts of DLF Limited are available in my office. That means what? Like I took management consultancy. I am maintaining entire books of accounts of DLF Limited in my office. Now, income tax authority, they have power to do survey in my office. Able to understand? Or books of accounts of company are there in the home of the director. Can they do survey at the home of the director? Yes, they can do survey at home of the director. But whenever they are doing survey at place other than place of business or profession. See, DLF Limited place of business is Delhi, but I am maintaining books of accounts in Vijayawada. Now, like department wants to do survey at my place. So this is not place of business. So they need to enter my premises only after sunrise, but before sunset. Are you able to understand? So other than, if they want to do survey at other than place of business or profession. Other than place of business or profession means what? At director place or CA office. If they wanted to do survey, then they can do survey. They can enter only after sunrise, but before sunset. For example, like I have studio in one room, I have office in another room. Now they wanted to do survey, office is closed, studio is running. They wanted to do survey of office. Can they do survey? They cannot do survey because like Mine is CA office. I am maintaining books of accounts of DLF Limited. My place is not place of business of DLF Limited. So now they cannot do survey. If they wanted to do survey, they should come tomorrow morning after sunrise. Are you able to understand? So other than place of business or profession, if they wanted to do survey, they should come after sunrise but before sunset. Are you able to understand? I hope you are understanding. I believe we both are in sync. Am I correct? Next. Income tax authority also have power to do survey at function. See, you can see so many lavish people. Okay, for function only they will spend crores of rupees. Now, can they do survey at place where function is going on? They can do survey, but only after completion of function. During the course of function, they cannot do survey. If during the course of function, if income tax officer can do the survey, if that power is given to income tax officer, then what will happen? Let's say there is one guy, he got broke up. He is having breakup with his girlfriend is marrying some other person. Now what this guy will do, this guy will call to income tax officer, sir, their lavish expenditure is being spent on that wedding, and then he will give information to department will go and do the survey, department will stop the marriage. Okay, that is risky na, that is like they will come against income tax department. So it becomes a loophole. That's why that power was not given. Income tax authority can do survey at the function, but during the course of function, they do not have any power to do the survey. Only after the completion of function, they can do the survey. Are you able to understand the concept? Otherwise, you know, you all can use it as a loophole. Next, there is another concept, TDS and TCS survey. Under TDS or TCS survey, department can come to your office. It can verify all books of accounts. Under TDS TCS survey, what they will do, sir? They will check whether you deducted TDS or not. They will check whether deducted TDS is deposited to government or not. They will check whether TDS returns are properly filed or not. They will verify only three aspects: whether TDS deducted or not, whether deducted TDS is deposited to government or not, whether TDS return was properly filed or not. Under TDS TCS survey, like books of accounts, they do not have any power to, no power to impound books of accounts. They cannot uh, impound books of accounts. They cannot verify assets. They cannot verify cash. They cannot verify inventory. They can only do inspection of TDS and TCS particulars. Gali Niranjan Rao, SAR block assessment. I hope you are there from the beginning. At the beginning of the session, I gave clarity about block assessment. So this is the concept relating to survey under section 133. Now shall we start discussing search under section 132? Interesting part. Section 132, search. Shall we discuss, everybody? First question, sir, when search will be conducted? First of all, in two cases search will be conducted. Case 1, SSE did not file ITR, ITR not filed. I'm sorry, hold on. Notice under section 142(1) is issued, but SSE is not giving any response, no response. Sir, what is notice under 142(1)? If you do not file ITR within the due date, then department will give notice under 142(1) and it will ask you to file ITR. Or if department wants any extra information and accounts, it can ask that information by giving notice under 142(1). Department gave you notice, but you are not responding to the department. You are not responding to notice given under 142(1). Similarly, department issued summons. Summons means I already said na, you need to physically go to income tax department. Department already issued summons, but you are not coming to income tax department. You are not complying with those summons. In these two cases, department can do search under section 132. Next, case 2. Department has information. Based on this information, on this basis, department feels you did not disclose such information in ITR. Let's say in 24-25 I purchased 5 lands. I did not actually purchase, I purchased 0 lands. Okay. For example, I purchased 5 lands in 24-25. But my income tax return, I showed only 4 lands. I did not show 1 land. But that information is available with income tax department, and income tax department feels that I did not disclose 5th land in my income tax return. In that case, department has power to do the search. Are you able to understand? So whenever notice under 142(1) is given and it is not complied, department can do search. Whenever summons are given and SSC did not appear in person, then also search can be done. Whenever department is having some information, based on that information, department feels that like that information is not disclosed in ITR, or even if notice is given, department is so confident that information will never be disclosed by SSC in the ITR. In these cases, department has power to do the search. Now, you will get one doubt. Sir, department has this information. Now, whether this information will be told to SSC. If this information will be told to SSC, then SSC can influence the search. SSC can tell to top-notch officer and he can somehow influence the search. So whatever the information that department is having, that information will never be told to any person. It will not be told to SSC. It will not be told to CIT appeals or JCIT appeals. It will also not be told to ITET. Okay, so whatever the information based on which search is conducted, that will never be disclosed to SSC, CIT appeals, JCIT appeals. It will not be disclosed to ITET also, but it will be like in High Court and Supreme Court, it can be disclosed. That means SSC filed writ petition. High Court asked what is the basis, what is the information based on which you have conducted the search. In that case, like department is required to disclose that information to High Court or Sir, any approval is required for doing search? Yes, approval is required. Only with prior approval you need to do the without approval, without search warrant. Sir, like only with search warrant you can do the search. In many movies you would have seen, okay, search will be conducted whenever department is doing the search. SSC will ask, okay, is there any search warrant, on which basis you are conducting the search. So search warrant is mandatory. Only if you are having search warrant, then only you can do the search, otherwise search cannot be done. Sir, who will issue search warrant? Search warrant will be issued by bosses or top bosses. That means what? It can be issued by commissioner, principal commissioner, chief commissioner, principal chief commissioner. Or it can be issued by director, principal director, director general, principal director general. Any of these can issue search warrant. Okay. So those who are issuing search warrant, they are also called as authorizing officer. Authorizing officer. Those who are conducting search. They will be called as authorized officer. Normally, search will be conducted by additional commissioner, joint commissioner, assistant commissioner, deputy commissioner. Those cadre people will actually conduct the search. They will be called as authorized officer. Sir, can joint commissioner of income tax or additional commissioner of income tax, or can assistant commissioner of income tax, deputy commissioner of income tax? I'm sorry. Additional commissioner of income tax, joint commissioner of income tax, additional director of income tax, joint director of income tax. They also generally search warrant will be issued by bosses or top bosses. But whoever as assessing officers are there, additional commissioner, joint commissioner, additional director, joint director, they also can issue search warrant only if empowered by CBDT. Only if they are empowered by CBDT. Let's say all bosses, top bosses are on leave. Search is required to be conducted. Bosses are not available. Then CBDT will authorize joint commissioner to issue search warrant. Then joint commissioner will issue the. Shall we discuss further? Sir, in search warrant, what they will write? In search warrant, they will write name of the SSE. Okay, place where search will be conducted, time and date search will be conducted. All this will be written in the warrant. Next, sir, what they will do in search? What are the presumptions? Powers during search, we will also discuss presumptions. So, whenever they come to search, they have ultimate powers. They can inspect entire building. Okay, so if they are having doubt, plaster of Paris ceiling was done. Behind ceiling there is cash. They have doubt. They can break the plaster of Paris. Like whatever the keys of Almira, keys of all all the things are required to be given. If keys are not given, they have power to break the almirah also. They have power to break the like sofa set, and they have ultimate powers. You have seen Malana movie, right? So in that way, they have power to break even the lockers, and they can do search. They will verify valuable articles, valuable things, whatever that are there. They will verify. They will prepare the statement. They will prepare the they wanted to verify your books of accounts, but your books of accounts are in Tally or in SAP. There is password. You need to give the password. Okay. Otherwise, they will bring technical consultant. IT guy will also be IT consultant will also be brought, and he will do something, and he will somehow give access of data to the income tax department. Next, see when you are going for search, like if department wants help of any other department, because politician's house is required to be raided. Okay, like search is required to be conducted in politician house. Now politician house, there will be gundas, rowdies. They will slap income tax people. That's why, like if they want support of police, they can take help of local police, but prior approval of bosses is required. They will ask bosses for additional police department support. If bosses gives approval, based on that approval, they will take help of police department or CBI or enforcement department. Along with that, they will go income tax department will go and do the raid. Next, presumptions. Whenever raid is conducted, whatever the assets that are found in that house is there or in that place is there, those assets will be presumed as belonging to that particular person. Let's say raid is conducted in my place. One costly diamond was found. I said that diamond do not belong to me. That diamond belongs to my sister. My sister is living in US. Okay. If I say cock and bull story, they will not believe. They will assume that diamond belongs to me. If that diamond really belongs to my sister, I need to prove to income tax department. Okay. I hope some suspicious guy has come with the name Broken Heart. He's asking irrelevant question apart from this assessment. Now, next, see if they find any agreement, they will find whatever the agreement that is there, whatever the content that is there in the agreement, that they will believe as true and correct. For example, like I purchased one building. I purchased building for as per MOU. I purchased it for 5 crores, but out of 5 crores, I paid through bank 3 crores. I paid cash of 2 crore rupees. But in my sale agreement, I disclosed only 3 crore rupees. Now they came to write na, when they are doing right, unfortunately they came across this memorandum of understanding. Now they will believe whatever that is there in MOU, they will believe, they will think 2 crore rupees, they will think 2 crore rupee, whatever the 2 crore rupees amount is there, the 2 crore rupees I paid in cash, they will believe, and they have power to impose 269 SS, 2690, 269 ST provisions on me. Are you able to understand? So that much powers, like department is that much presumptions department can take. Okay, so whatever the assets that are there, department will think that assets belong to SSE only. Whatever the books of accounts, whatever the agreements that are there, whatever the content that is there in the agreement, department will believe it is true. Similarly, if any signatures are found on any document, even though those signatures are forged signatures, still department will believe that particular person has signed the document. All these are the presumptions that department will consider while during the course of search. Okay, next. Sir, do they have power to seize assets during the course of search? Yes, they have power to search, seize the assets during the course of. Under survey, they do not have power to seize the assets. They can only impound books of accounts. They do not have power to impound assets. But under search, they have power to impound books of accounts. They also have power to impound assets also. Second thing, if they could not seize any asset because of any hardship, whatever the assets that they could not impound, they will give the order those assets should not be moved without approval of income tax department. Let's say there is one room, one floor is there. Outside that floor, there is RDX bomb. Now I am the income tax officer who is doing the raid. How can I go into the room crossing that RDX bomb? It is life threat to me na. So what I will do, I will give the order like whatever that room is there, that room should not be opened without approval of income tax officer. That we call as deemed seizure or constructive seizure. Are you able to understand? Let's say I am doing ride of Tata Limited. Tata Limited has business across multiple places, right? It has business in Mumbai, it has business in Delhi, it has business in Rajasthan, it has business in Hyderabad, it has business in Chennai. Now, whatever Tata Limited is there, head office is Mumbai. You know, right? Whenever they do ride of all places simultaneously. At a time, they will do the ride. So whenever they do ride simultaneously at a time. In that case, whatever the see Sing officer of Delhi, Sing officer of Rajasthan, Sing officer of Hyderabad, Sing officer of Chennai, who is having jurisdiction over that place, they will go, they do the right, and whatever the assets that are seized are there, assets seized or whatever the books of accounts impounded are there, all these will be submitted to AO having jurisdiction over head office. Okay, within 60 days they will submit the books of accounts seized and assets, books of accounts and assets that are seized will be submitted to assessing officer having jurisdiction over head office, so that that assessing officer can proceed further and he can complete the. Able to understand? I will tell one example. There is one guy, Monish. His place of business is being uh, searched. In his place of business, let's say cash, jewelry, and precious articles are found. These can be impounded, na? So these will be seized. Monish is having bank account, demat account, immovable property. Now, can they be seized? They cannot be seized. So what they will do? They will provisionally attach these properties. Are you able to understand? What they do is provisionally attach the. Now, yeah, one interesting point. Whenever they do search, like if there is gold per man up to 100 grams of jewelry, they will not seize. For unmarried girl up to 250 grams of jewelry, they will not seize. For married girl up to 500 grams of jewelry, they will not seize. See, after conclusion of search, they will prepare one panchnama. In that panchnama, they will write whatever the assets that are found. They will prepare statement of assets and inventory, right? Every statement of asset and inventory, it is clearly written in panchnama. It is also called as last of authorizations. After writing Panchnama, they will take the signature of the SSC. So, like whatever the gold that I am holding, that gold will be disclosed in Panchnama, but gold will not be seized. Okay, so there is one Stirdan limit. For male, up to 100 grams of jewelry will not be seized. For girls, unmarried, 250 grams, married, 500 grams. Till that point, jewelry will not be seized. Are you able to understand? Now, books of accounts and assets were seized. Now, when can SSC get those books of accounts and when can SSC get those assets seized? See, after conclusion of search, what department will do? Department will do assessment. Department will give scrutiny notice either under 143.2 or it will give notice under income escaping assessment 148, or block assessment can also be done from 1st September 2024 on. So once the search is conducted, next immediately department will do the assessment. After completion of assessment, SSC can get back the books of accounts from the department. Are you able to understand? Let's say search conducted. After doing search, what they will do? They will do assessment, right? They will complete assessment. They will complete assessment under 143.3 or 144 or 147 income escaping assessment. Whatever the date of completion of assessment is there, from date of completion of assessment, within 30 days, within 30 days, like department will hand over books of accounts to assessment. Sir, can department retain books of accounts even after 30 days also? Yes, department can retain after even after 30 days also, but prior approval of bosses or top bosses is required. Now your doubt is, sir, after 30 days, why department still wants books of accounts? Because assessment is already completed, demand notice is given. To levy penalties, department may require books of accounts even after 30 days also. Department can retain even after 30 days also, but prior approval of bosses or top level bosses is required. Are you able to understand? There is one concept, explained assets, unexplained assets. Explained assets means those assets which are purchased out of white money. That means whatever the income that is disclosed in ITR, using that income only I purchased assets. Those assets we call as explained assets. If any assets are purchased with without white money, that means if any asset is purchased out of income that is not disclosed in ITR, that we call as unexplained assets. Are you able to understand? Sir, why you are discussing about explained assets and unexplained assets? Department conducted search in my place. There are some assets which I truly disclosed in my income tax return. Those assets I can get back from the income tax department. Are you able to understand? Whatever the unexplained assets are there, those unexplained assets I can get only after completion of all proceedings. But whatever the explained assets are there, those explained assets I can get back within certain time limit. Are you able to understand? That's why. Now I will take one example. There is one guy with the name Varun. Search was conducted in Varun place. Let's say cash of 50 lakh rupees was seized, gold of 80 lakh rupees was seized, jewelry of 10 lakh rupees was seized. So total how much of assets were seized? 50 plus 60, 50 plus 10 plus 80, 140 lakhs worth of assets were seized. Out of 140 lakhs worth of assets, out of 50 lakhs, 30 lakhs is white cash. White cash means what? It is explained asset. Whatever gold is there, it is not explained. Okay, entire gold they purchased it with cash, not explained. And whatever 10 lakhs is there, the jewelry, this is also purchased officially. This is also explained asset. So how much is my white money? My white money is only 40 lakh rupees. Sir, now department has done search. Out of 140 lakh rupees, 40 lakh rupees is genuinely disclosed in ITR. Now whatever the assets which are genuinely disclosed, can I get back those assets from department? Yes, you can get back those assets from department, but department will calculate the tax liability. After adjusting the tax liability, department will give the explained assets to you. Are you able to understand? For example, I will take one small example. Assets seized. Assets seized on 20 June 2024. When they are seized? 20 June 2024. Search completed. Sorry. Search started on 20 June 2024. Search completed. Completed on 27 June 2024. Now, the month in which search is completed. What is end of month? End of month is 30 June 2024. Na? From 30 June 2024, within next 30 days, I should make application. In that application, I will tell, sir, 140 lakhs assets you have seized. Out of 140 lakhs, 40 lakhs I genuinely disclosed in ITR. Please give me those 40 lakhs assets. I can make application for recovery of explained assets within 30 days from end of month in which search is completed. Next. Then what department will do? 40 lakhs assets I genuinely disclosed. Na? Whatever the tax liability is there. Now, see, when search is conducted, already existing tax liability is there. It will adjust existing tax liability. Balance will be given to me. For example, already existing tax liability is 20 lakh rupees. So, how much is explained asset? Explained asset cash is 30 lakh rupees. Asset is 10 lakh rupees. Okay, so department will adjust this liability 20 lakh rupees, balance 20 lakh rupees and balance 10 lakh rupees and asset 20 lakh rupees. Total 20 lakhs will be given to me. Are you able to understand? Sir, I made application within 30 days from end of month in which search is completed. Within how much period department will give the asset back to me? Department will give asset back to me within 120 days from date of completion of search. What is date of completion of search? Date of completion of search is 27 June 2024. From 27 June 2024, 120 days. That means June 3 days, July 31 days, August 31 days, September 30 days, October 31. October 31 means total 126 days minus 6 days. So by October 25, so October 24, 2024. So on or before 24th October 2024, department will give back explained assets to me. Within 120 days from date of completion of search, department will give back the explained assets after existing the existing tax liability. Here existing tax liability means whatever the tax liability for which demand notice was already issued. I did not pay advance tax. Can they reduce advance tax from explained assets? No. Whatever the already existing tax liability for which demand notice was issued, that they can reduce, and balance they can give. Balance explained assets will be given to me within 120 days from uh, date of completion of. If can't get back 40 lakh rupees, I did not understand your doubt. Okay, I will tell one scenario. Here, tax liability is 20 lakhs. For example, tax liability is 35 lakhs. Cash 30 lakhs is available. Jewelry 10 lakhs is available. Now, 30 lakhs they will adjust. What about balance 5 lakhs? They cannot break the jewelry, right? What they will do? They will sell the jewelry in open auction. They will get money. They will adjust 5 lakh rupees. Balance 5 lakh rupees will be given to the SSC. Are you able to understand? Yes, I do teach for CA final. What happened? Sir, then what about unexplained assets? There are unexplained assets. Na? How much are unexplained assets? Cash. Like 30 lakhs is explained. Balance 20 lakhs is unexplained. Na? So, cash 20 lakhs unexplained. And gold 80 lakhs was also unexplained. Sir, when unexplained assets will be given, department will complete the assessment. After completion of assessment, department will tell what is the tax liability. For example, department completed assessment after search. Then department determined tax liability is 60 lakh rupees. Whatever the tax liability 60 lakh rupees is there, first 20 lakhs cash will be taken. This will be sold. After selling, 81 lakhs was received. Out of 81 lakhs, 40 lakhs will be adjusted. Balance 41 lakhs will be given to the asset. So explained assets will be given after completion of search if within 30 days application is made. But unexplained assets will be given only after completion of assessment. After completion of assessment, whatever the tax liability is there, the tax liability they will adjust against unexplained assets. Whatever the balance unexplained assets are there, they will be given to the asset. They will understand. So this is the concept relating to fast track batch. Abhi not possible currently because in the next month I'm having 4 batches for May 2026. I need to teach CA Inter, CMA Inter, CA Final, CMA Final. All those 4 batches are locked in August month. So again, I cannot start fast track batch. That's why in revision only, to the extent possible, important concepts I'm telling in a clear way. Okay. Even though I take extra half an hour class, it is worth. So this is the completion of search. I hope you understood search concept. Very, very important. I did not rush. I took enough time to explain you. Now shall we discuss remaining concepts? Time is already 9. So these concepts are pending. 142 1, 143 1, scrutiny, best judgment assessment, 144C, 142A. Additionally, 147 income escaping assessment, then block assessment, that is also pending. Along with these, I need to discuss appeals and revisions. Equalization levy, small topic, 10 minutes topic, 10 to 15 that we can. So shall I proceed further? Yeah, 142, 158. That's what I have written sections now. Block assessment is 158. I will explain that also. My objective is to explain, revise in a clearer way, even though it takes a bit of time. So, students, shall I continue or shall we continue this tomorrow? Tomorrow, sir. I hope I can understand assessment procedures. Basically, it's a theory chapter. Will be like that only. At a stretch. Okay, for today, I am concluding live here. Please wait. Tomorrow, I will explain remaining section. Tomorrow, can we start our live a bit early at 6:30 p.m. so that we will have time till 9? We can close everything. So, are you comfortable at 6:30 p.m. tomorrow? Please comment. 6 p.m. to 9 p.m. That will be heavy. 3 hours at a stretch. Uh, Solve one or two problems. Students, whatever the problems that you wanted, please share in Telegram group that I will discuss in tomorrow's live. Whatever the problem you wanted, where you are having, please share in the group. You ask, sir, please explain this problem in the live. Not at all a problem. My objective, you wanted to qualify. Your success is my success. So that's it for today. Good night. Bye. Let's meet tomorrow with balance assessment procedures. Tomorrow we will have class at 6:30. Okay, 6:30 p.m. tomorrow. Another important thing, I am not sharing this running notes with you today. Tomorrow, after we complete entire assessment procedures, I will share this document with you in the web. Okay. Jan 26 exam any batch, sir. I am sorry, Niranjan, but whatever the doubt, whatever the concept that you are confused at, please ask me. Into you, no problem. But fast track batch, abhi to will be very tough for me to adjust my timeline. Thank you. Okay, good night. See you tomorrow. Bye. Have dinner and have proper sleep. Yeah, Shenmuga Priya. Yes, I will solve some problems. Whatever the problems that you wanted, please share in Telegram group. In tomorrow's live class, I will solve those problems. Because instead of me picking, if you pick, then it's like I am solving your doubt as well. Okay, bye.